course, with the difficulties facing both Japan and the Middle East, it's an uncertain time for investors. So which asset classes offer the best potential for a return on your cash? Well, with me is Piers Hillier, Chief Investment Officer at Liverpool Asset Management. Piers, thank you so much for coming in. It must be a very difficult time to actually navigate the markets. A lot of volatility, a lot of uncertainty. And you have, on the one hand, the unrest in the Middle East, but also the Japan crisis. And in both cases, we actually don't know where the end is.
You're absolutely right. And I think in some ways, in those kind of environments, you need to use some additional tools in the tool bag from a classic equity, bond, cash perspective. I think sometimes you want to use option strategies to give you some protection.
So kind of hedging against against inflation?
Well, some put protection if you're concerned about equity markets, or as we considered last week, buying calls on Japan when the market was off 16%. We felt that in a very short term that provided a buying opportunity. Feeling good comfort with Mr. Buffett in terms of being a buyer of Japan at this point in time. I think the reconstruction efforts, I mean, obviously it's a major tragedy, and our sympathies are with the Japanese people. We work closely with Nomura out there, and we with them, I think, see that will be an opportunity to rebuild Japan. I think actually in many ways it provides a great buying opportunity to see an inward investment into Japan, which you haven't seen historically. Japan only accounts for sort of 9% of exports from Europe, and so for us as European investors, maybe that's an opportunity. I think we're in the camp also that says the yen will weaken from here. I think the biggest concern for me from an asset class point of view is actually US Treasuries, that the Japanese government repatriates some of that money it holds in Treasuries in order to help with the rebuild. But generally speaking, I think it provides an opportunity. Classically, what we've had and why sort of recovery has been a bit sort of stuttery is we've had excess capacity in the world, and really, this crisis in some ways has reduced some of that excess capacity. It's obviously provided pinch points in some of the auto stocks and component manufacturers you've talked about already this morning. But actually, I think what that will encourage is new investment and reinvestment, and particularly infrastructure investment in Japan is great for stimulating its economy. It probably means that we will see a little bit more inflation, so classically we'd expect equities to do a little bit better than bonds in that environment. So
if we just recap what you're saying, sell treasuries, buy some Japanese equities, especially in the construction sector? Yeah, I think we feel comfortable generally buying equities across the piece at the moment. I mean, Europe, I suppose, is probably the one area that we're a little bit more cautious because of because of what? Just the debt crisis?
The debt crisis is one, but often, as you've seen today, the activities of Deutsche Telekom, finally doing something in terms of addressing its poor return on investment record and adding some discipline to it. Investors will like that. Obviously, the stock marked up sharply this morning, but I think that's what we're seeing in Europe is a little bit more discipline in terms of focus on return on investment. It sees even Europe being an attractive place to invest as well.
What about the Middle East? Again, a lot of uncertainty there. We've been speaking to some analysts who say, well, actually, everything's priced in now because we were expecting the worst, so maybe this may be a buying opportunity.
Yeah, I think with the oil price, very much you're seeing a classic sort of speculative play in markets at the moment. If you look at where sort of excess capacity is at the moment, we're seeing global production running ahead of demand, yet the price is still rising, and that's because financial intermediaries are buying it, expecting the price to rise. Now, if the Libya contagion doesn't spread out to the rest of the Middle East, then that assessment's absolutely right. And I think that's what markets fear is that this rolls on further. The issues in Bahrain, etc., have been well documented.
Piers, what about bonds? I know you say you're not a buyer of treasuries at the moment because of the Japanese factor. What about bonds elsewhere, emerging market bonds?
Well, funny enough, our biggest decision most recently this year was to buy UK gilts. We felt the market had moved too far too soon to discount rate rise in the UK. We'd already priced in 3. Now, markets move very quickly, and that anomaly has corrected. And so, in some ways, we find ourselves, a bit like last year, risk on, risk off. We took risk off back in February. Our inclination is to put risk on. I think we just like a little bit more clarity in terms of the Japanese situation with Fukushima and what that potentially means. And I think we will see some resolution in the Gulf, which will provide a good opportunity as well.
But no peripheral bond buying?
No peripheral bond buying. Australia, probably the most interesting bond market at this point in time.
Piers, thank you so much. Piers Hillier there.